A very warm welcome to today's edition of Money Moves. I am Melissa Enoch. It's Thursday, September the 25th.
And I am Grace Agbaraguye at the FMDQ Archives in Lagos. Thank you for joining us at this time on the show.
All right, then let's tee off with your news now in Morocco, where King Mohammed VI has launched new railway project in the Casablanca metropolitan area worth 20 billion dirhams or about $2 billion. The investments are part of a 96 billion dirham national rail development program to expand sustainable low-carbon transport and meet the mobility needs of Greater Casablanca. The projects complement the Kenitra-Marrakesh high-speed rail line unveiled earlier this year, one of Africa's most ambitious rail initiatives. In South Africa, leaders from South Africa and the United States have opened fresh talks under the Trade and Investment Executive Dialogue. The meeting aims to deepen trade and investment ties between the two countries, exploring opportunities for expanded partnerships across key sectors. Let's take a listen.
And we see this engagement today not only as an opportunity to deepen commercial ties, but also as a platform to address what I would call the broader strategic imperatives that bind our two countries and two economies together. Now, these imperatives include ensuring resilient supply chains, advancing clean energy transition, securing access to critical minerals for the industries of the future, and fostering inclusive growth that creates jobs for young people in both our countries. From our own point of view as South Africans, we do not take the relationship between South Africa and the United States for granted. We value the trust that American companies continue to place in South Africa, and we are committed to ensuring that this partnership continues to grow. For the investments that they make in South Africa, in our view, is a great vote of confidence in our country, in what our country can offer to their businesses. But it should also be seen in broader perspective, that it is a vote of confidence in the continued of good relations between South Africa.
In Zimbabwe, First Capital Bank has issued a cautionary statement revealing plans to sell its 50% stake in Macassa Sun Limited, owner of the Macassa Sun Hotel in Victoria Falls. The bank and its partner are in talks with a potential investor, with guidance expected from the Victoria Falls Stock Exchange on how to classify the transaction. Shareholders have been urged to exercise caution when trading the company's shares until a full announcement is made. In other news, the African Development Bank Group has approved a $209 million country strategy paper for Lesotho, setting out a 5-year roadmap to drive economic diversification, resilience, and inclusive growth. The plan comes amid headwinds, including a 15% U.S. tariff on apparel exports, the loss of a $300 million Millennium Challenge Compact, and heavy dependence on regional economic performance. It aims to unlock private sector growth, create sustainable jobs, and strengthen institutions in a country where nearly half the population lives in poverty and youth employment stands at 39%. In New York, African leaders have gathered for a high-level event on the continent's financial institutions, calling for stronger homegrown solutions to fund development and reduce external dependence. Kenya's President William Ruto called for the continent to take charge of its own financial destiny, stressing the need to build stronger African-led institutions to drive growth and independence. Let's now pay attention to him.
In our continent, including in Kenya, 7 million people are living in slums. Yet we were the same 60 years ago. Difference? Leadership. Yes. So, what am I saying? It was what inspired us to do what we are doing in Kenya today. I was showcasing what we are doing. We are building, at the moment, 170,000 housing units. We are building 400 markets. We are building hostels for 170,000 university and college students, all on locally mobilized resources in Kenya. We have not borrowed a single shilling. We have not borrowed a single shilling. And you know how many contracts we have signed, how much? The worth of contracts we have signed in the last 2 years is $4 billion. The CEO of Shelter, who operates from Nairobi, is right there. He knows what I'm saying. In fact, when I mentioned this in one of the interviews I was in Ethiopia, people say, $4 billion, is that really possible without borrowing? Because we have refused to mobilize domestic resources because we are accustomed to borrowing money from the people who we complain.
Finally, on News Now, Kenya Revenue Authority has announced that all inputs must now be accompanied by a certificate of origin starting 1st of October 2025. The requirement, enforced under the Tax Procedures Act, follows a transition period that ended on September 30. Exemptions cover personal baggage, postal mail, human remains, used goods, and small medicine packages, with other cases subject to customs verification. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly with Grace at the Archives Room for our markets updates. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace.
Thank you, Melissa. Now let's track how the markets are wrapping up today with equity prices. Here in Nigeria, the NGX closed on the positive, up 0.31%. The Bureau of in Abidjan also gained 0.32%. Nairobi Stock Exchange closed on the positive, up 0.38% to 177.80. In North Africa, the EGX slipped 0.77%, while Morocco's MASI fell 0.45%. And in South Africa, the Johannesburg Stock Exchange lost 0.77%. Let's do a quick round on some of the Pan-African currencies. The Rand firmed 0.42% to 17.40 Rand per dollar, while the Egyptian pound dipped 0.05% to 48.13. The CFA franc strengthened 0.66% to 558.66. Meanwhile, the Moroccan dirham rose 0.23% and the naira edged up 0.06% to 1,419 naira 41 kobo. Let's switch into the commodities data deck, beginning with energy prices. We saw oil prices down today after a 7-week high, with Brent crude down 0.30% at $69.10 per barrel, and US WTI slipped 0.43%. Natural gas added 2.55%, and ROBOB gasoline declined 0.81% to $2 as of 13:02 GMT. Now, finally, to metals prices. Gold edged 0.17% and copper fell 0.50% to $4.73. Platinum, however, gained 1.68% to around $1,500, while aluminium rose 0.34%. Iron ore was little changed, up 0.05% as at 13:04 GMT. And that's our market prices today. Over to you, Melissa.
Grace, thank you very much for those market updates. And that's it for this week's Thursday's edition of Money Moves. I am Melissa Enoch. And from all of us here at the FMDQ studios, we say thank you for watching and bye for now.